If you are thinking about buying a new car in 2026, then you might be in for a surprise, or you might want to consider a US assembly made car because with the one big beautiful bill that was passed in July of 2025, there was a pretty big addition to this tax law, on this new law that passed in the bill, saying that car loan interest would be deductible up to $10,000 for certain qualified cars. And so I've had a few people ask me if this car deduction will apply for business. And so I want to talk a little bit about that today. If you are brand new and you've never joined this live, my name is Jennifer Drew. I am the founder and CEO of Hair CEO. We are a business advisory, bookkeeping, and tax firm catering to self employed hair professionals and beauty and hair business owners, helping them run legitimate, profitable, and bankable businesses. And so, as I was doing my research for this particular episode of this series, and by the way, this is a 90-day series. We're actually in day 51, and we're going to 90. And I'm just talking about different tax topics for this 2026 filing season. So, as I was doing my research for this particular live, I was really surprised to find out that car interest was once before tax deductible about 40 years ago. So, 40 years ago, car interest was a thing that you could deduct. But in the 1980s ish time, Congress decided that they wanted to encourage more investments, and they didn't want to encourage debt. So, a good way to encourage or suggest people do things differently is to put it in the tax code. And so that's the reason why it was ultimately removed, because Congress was saying, well, we don't want a lot of Americans going into debt. We actually want to encourage building assets. So we want to phase out car interest as a deductible expense and just stick with the home interest expense. So that was really interesting to learn. I did not realize that. And so now in 2025, Donald Trump has pushed this car interest deduction in an effort to increase refunds for people. And so I want to make sure that we understand how this applies to your business and just your overall taxes. And if you're in the market for a car, what to consider if you're looking at, buying new and buying, in the US or something like that. So I have a few things that I want to talk through. The first one is that this personal deduction. So, this deduction is a personal deduction. This is not something that is for businesses, but we're going to talk about how it can be used for business if you buy this car. So, this is a personal deduction. It's on your personal tax return, not on your business tax return. And you do not have to itemize to receive this deduction. This is what's called an above the line deduction, meaning that even if you are taking the standard deduction, you could still take advantage of the car interest that you are paying. Now, it's up to $10,000. So that would tell me that you're paying a lot of money for this car. I mean, think about it. $10,000. I mean, that's for 10 months, that's $1,000 a month. I mean, I know people are paying, $1,000 for car notes. Not that I condone it, but it happens, right? But if you think about it, if you're paying $1,000 for 10 months and then you're not even touching principal, and that's all interest, I mean, I'm sorry, but a tax deduction is not really going to be helpful. You need to pay off that car because your money is like going all towards interest. Like, when are you going to own the car? So, we have to be careful about getting excited about things that are actually going to keep us, um, further away from our goals. So if you have to buy a car, yes, you can definitely use the tax code to figure out, like, okay, is this going to make sense for me? But we certainly don't want to, be excited about, oh yeah, I was able to write off $10,000 of, car interest, um, for my car interest loan, my interest on my car loan, because that what that's telling us is that you I mean, I don't wanna make assumptions, but I mean, I certainly don't wanna be paying $1,000 a month or even $800 a month for a car note where all $800 is interest. That's insane. So, but yes, it's a personal deduction. I say all that to say it's a personal deduction. Now, what's interesting is that this new deduction is very specific in that it has to be it's a personal deduction, right? So what the law says, what the IRS like guidance says, is that the car has to be used for at least 50% for personal use. So technically, you could use it for business purposes, whether that is, making trips back and forth to the bank or back and forth to, let's say you have a booth that you set up every weekend and it's out of town and you sell products there. It could be used for that business purpose. And you just need to make sure that the car is primarily, 50%, not primarily, but 50% used for personal, personal travel. Now, when it comes to the business portion, let's say you have, let's say you have a mobile barbershop or a mobile hair salon. Now, this technically would not be a deduction for you. This, this up to $10,000 interest, because if you have a mobile hair salon or mobile barber shop, right, like a sprinter van or something, then you're not going to be using that 50% for personal use. Not at all. It's typically going to be 100% used for business. Now, here's the catch: for a business vehicle, then at that point, if it's 100% for business, then you're looking at writing off your interest for business purposes on your business tax return. So that's just if it's 100% business. But let's say it's not a mobile barbershop or a mobile hair salon, and you're just, doing like supply runs, or you're going to um, trade shows and you're doing, just regular business trips 50% of the time, then what you could do is you could still write off, excuse me, you could still write off the interest, but it would have to be at a prorated amount for the mileage. So you would need to allocate how much of the driving is for business, how much is it for personal, and then you could write off that portion of the interest. But here's the catch: if you do that, you have to make sure that you are deducting it from the personal deduction. So if this sounds complicated, that's because it is. And so this is not something you want to do on your own. You want to make sure that you are speaking with your tax professional and make them aware that you want to know the details about the personal car interest deduction for assembly, US assembly made cars. Now, that brings me to my third point, because it does have to be assembled in the US to qualify. So this is not going to work for your BMWs, for your Mercedes, for your whatever, your Rolls Royce, whatever you drive, right? Like, we're talking these fancy cars that are foreign made, not going to qualify unless they are assembled here in the US. Now, that's part of the reason why Trump did this, right? Like, if it moves the needle that much and people are like, oh, wow, like, I really want to take advantage of this deduction, so I want to buy US assembled cars, then that's one of the incentives that Trump is hoping moves the needle for these car companies to start bringing, assembly back to, or to the US. I don't know about back, but to the US. So Yeah. But for right now, some of the rules are the car has to have been purchased. I think it's, let me just double check. The purchase had to be, I think it is like a car wash or anything about investment, like a wash loss in Robin. Oh yeah, wash loss. Absolutely. Who's that? Okay. Yeah. That's not related to the car interest loan deduction. But yes, I can certainly talk about the investment wash loss in Robinhood in a future live, but not tonight. So the US Assembly, like I believe, I want to say it's January. I want to say the car had to be purchased January 1st, 2025, or January 1st, 2026. I'm not sure. I thought I wrote it down, but I didn't. So I'll make sure I add it to the description after this recording, because I do want to make sure that I'm very clear on when you would have to have bought the car by. But again, this is something that you want to pay close attention to. The year, I mean, the make and model of the car, to make sure that it's made in the U.S., assembled in the U.S. I apologize. And I believe that the VIN number, you can look at the VIN number to see if it was assembled in the U.S. And so you want to look for VIN numbers that start with 1, 4, and 5. This is from what I researched, that if your VIN number starts with 1, 4, or 5, then that means it was actually assembled in the US. I thought that was kind of interesting and cool. I was like, wow, didn't know that. And then, of course, you will want to make sure that the purchase date is aligned with when the tax deduction is actually applicable and usable for you. So these are some things to keep in mind. But remember, I really don't want you paying $10,000 in interest on a car loan. What in the world? I mean, that's insane. Now, if it's a mobile barbershop, like, even then, I'm like, that's too much interest. But at least you're making money. But a car for personal use, $10,000? Whew, that's a lot. That's a lot of money. So, yeah, that's what I wanted to talk about today. I did get your question. Anything about investment, like a wash loss in Robinhood? Yes, we will absolutely talk about that, because I do see a lot of our clients come to us with Robinhood transactions. Oh my gosh, so many. And I will tell you, a lot of people forget that they have Robinhood transactions, because they do it so I don't know, it's like almost like a hobby. They're just like buying and selling stocks, and then they don't realize that every time you sell a stock, it's creating a taxable event. And so I'll have people come to me, and they will have letters from the IRS, and they'll say, hey, you didn't report your earnings from investments. And they're like, I don't remember investing. And so when we go digging, and we'll see, oh, you actually had earnings from Robinhood, and from, what's the other one I see a lot? Not Acorns, but there's another one. Now I can't remember. E-Trade, I can't remember. But yeah, a lot of them. And then they'll have earnings, and it's a taxable event. So you definitely want to make sure, if you do, dibble dabble in Robinhood and trading stocks, that you bring that information to your tax professional, because that is a taxable event and it's reported to the IRS. So the IRS is already going to know about it. They're just waiting for you to report it. And so that's something that we will touch on in another episode. But that is all I wanted to talk about today with the car interest loan deduction for the 2025 taxes. So we're in this filing season right now. And if you are a self-employed hair professional, or you in the hair industry, and you want help with your taxes this season or for a prior year, definitely reach out with the link in the description. I would love to work with you here at Hair CEO. And that is it. Thank you so much. Of course. Thank you, Ultra Night Owl. Love it. Oh, you're a night owl. I'm a morning person. But yes, hope to see you on another live. I will absolutely talk about the wash losses and how to claim the income or the losses, right? You want to make sure that you're taking those losses, because that can offset some of your your income. So I'll go all into the Robinhood. Tell me, Ultra Night Owl, who do you use for your investments? Because I'll make sure. Are you using Robinhood? Because I know you mentioned Robinhood. So if you absolutely use Robinhood, I'll make sure when I do my video that I actually cater it to Robinhood. I'm thinking it is Robinhood because you mentioned it. So I'll make sure that when I put together the live that I talk specifically about Robinhood. And I will say, yeah, good. Okay, Robinhood. Because that is what the most of my clients do use is Robinhood. So I'll make sure when I talk about the losses and the credits, I mean, and the income that you receive from selling the stocks, if there is a wash, if there's a loss, if there's a gain, I'll go through all of that and I'll even connect it with how that impacts your income for your business if you have business income. All right. So I'll make sure I talk about that. All right, guys. Well, happy Friday and have a good evening. And I will see you tomorrow on another episode of 2026 Tax Talk.